Ashish Gupta joining in, Chief Investment Officer, Axis AMC. Ashish, always a pleasure to have you with us on NDTV Profit, and great to have you on today. Are you shopping for all of these promoter stake sales when they're coming up? Because this is what mutual AMCs seem to be doing.
Yeah.
Promoter comes
So,
to sell, there's a block deal, and there's a mutual fund on the other side.
actually, I think we have seen in the last 2 months acceleration both in promoter stake sales and private equity stake sales. And I think from this week, we are seeing quite a large pickup in IPO pipeline as well. So several large IPOs are going to come in the coming few weeks. So I think this is a trend that we have been seeing uh, over the past 18 months. So even in 2024, there was a fairly large supply of equity coming into the market. And in fact, it was outpacing even the inflow into mutual funds. And in the first quarter, with the market correction, this supply reduced. And now, with the market recovering, we are seeing this supply kind of resuming. The good thing is that we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think two IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided. So what you were seeing in the second half of last year when IPOs were getting subscribed multiple times and there were large listing pops, I think now IPOs are getting more rationally priced and subscribed.
Okay. Ashish, good morning, Neeraj here. Considering the
Hi, Neeraj.
pipeline that is on offer, do you reckon that unless global flows turn back into favor of EMs in India, that IPO pricing could be a lot more reasonable? Because as of now, the supply seems to be daunting. And while mutual funds are, and the Indian retail investor is a big port of call, there is only as much that mutual funds will keep on lapping up, right?
Sure. No, definitely. I think the fact is the demand and the supply go hand in hand, right? So during the period when the foreign flows turned negative and you saw correction in the market in the Jan to March period, the supply also kind of went away, right? So some of the supply comes to the market only when there is demand, right? If I take the question slightly differently, so will this kind of supply mean more moderate upside in market return this year? I think that is definitely the case. I think just because liquidity flows continue with mutual fund and potentially FII flows come in with the dollar weakening, uh, should not be assumed that the market will have very large gains this year because the supply will counterbalance it. In fact, what is interesting is that we have been talking about our market getting back to all-time high. If I look the last 6 months, so YTD, uh, many markets have actually sharply re-rated. So if you look at Korea, in dollar terms, it's up nearly 40%. Japan is up 20%. Germany, France, UK, all these markets are up between 20 to 30%. Even Brazil is up about 30%. So in fact, year to date, as you know, Nifty is up about 6-7% now. Year to date, India is actually not an outlier in terms of performance and actually underperformed many global markets.
Ashish, in terms of how you're looking at Indian equities right now, all considering the same, economy is doing okay, good monsoon, looking bullish, corporate results last quarter were not as bad as expected. Having said all of that, one core momentum seems to be missing. Do you see that turning around in the next couple of months?
So I think you are right. Last quarter results were not as bad, but we have to take it in the context of expectations, right? So if you see earnings started missing estimates from June last year, and that was when expectations of earnings growth for last year was about 16-17%. Come to the March quarter, the earnings growth expectation itself had come down to about 7-8%, and really a company earnings did not miss those estimates. So we did see a very sharp downgrade in earnings through last year, despite relatively lower misses in the fourth quarter. If I look at this year, growth expectations are more modest. We are starting with about 11-12% growth. And lot actually hinges on the second half of the year, because as of now, we continue to see mixed trends. So if you see broad indicators, so there are indicators like GST collections are up 12%, e-way bills are growing in double digits. But there are multiple indicators, whether you look at power demand, you look at diesel sales, even FMCG and auto sales, they continue to be soft. Part of it is seasonality, part of it, as you were talking about earlier in the show, relates to some of the events that transpired during the quarter. But I think the big hope is that by the second half, and really September, October, all the liquidity easing and the regulatory easing done by RBI starts to feed into the economy, and that kind of start showing up in the numbers. So I think expectations that we have for this quarter is going to be muted. But I think the outlook from September is actually more important.
Ashish, you guys are maybe GARP investors, and forgive me if I'm making a wrong presumption, but if that is indeed the case, is value currently in BFSI predominantly? It's a large bucket, provides a lot of options, and the regulatory tailwinds, if I can call them that, are in favor.
So BFSI is one sector that is trading below its historic multiples. But having said that, it is also a sector that is growing slower than its historic growth rate, right? So we are still looking at only 9-10% credit growth currently. Even if you look at sectors like insurance and private insurers that used to grow premiums at 25-30% are just growing it in mid-teens now. So the growth curve for the sector has also shifted. Yes, we like financial, but I think there are several other pockets that offer growth as well. We continue to like capital goods. We continue to like segments like hospitality, hospitals, retailing, real estate. So I think while financial is one pocket, I think the opportunity in the market is a lot broader. And again, while we have seen the regulatory unwind and the liquidity support, growth for financial still has to kind of come back to levels where it used to be 3-4 years ago for us to see multiples go back to that level.